Welcome to Elevate, the masterclass where we dissect the elements of exceptional achievement and lifestyle design with a focus on personal growth and real estate investing. Now, here's your host, Tyler Chesser.
Elevate Nation, welcome back. This is Tyler Chesser. I'm so thankful to have you here. I'm feeling good today. You know, you got those days where some days you're a little cloudy, some days, it's not the best, but I just got that feeling today. So I hope it shows up. I hope it shows up for an amazing podcast. I appreciate you joining us today. And I'm absolutely blessed and grateful to be sitting with David Stein today. I hope that you're excited. I'm excited for a wide-ranging conversation with an individual like David, who offers so much value for so many people and who has created really so much wealth, not only for himself, but for others as well, just through sharing information and through being an expert, through investing in himself, investing in his own learning. So we're going to distill that today. I'm really excited about that. And I want to ask you the question that I always ask. Are you ready to take it to another level? Because that's what we're going to do today. This is Elevate. Of course, we sit down for mind-expanding conversations with influential authorities in real estate, as well as experts in other industries and disciplines. And of course, this is for leaders, entrepreneurs, and real estate investors who have a burning desire for the extraordinary. It is our mission to identify and apply how the best of the best raise the bar personally and professionally to achieve greatness in real estate and beyond. Of course, we will distill the mindset, habits, routines, systems, tools, the strategies, and so much more from those who are elevating to a life without limits so that you can do the same or even more for yourself and for the people that are important to you. Of course, that's what David is doing. And so just be ready, take notes, and take massive action on what you learned today, because it's going to be phenomenal. It is a masterclass for leaders and those looking to achieve uncommon results and purposeful outcomes through personal growth, real estate investing, other ventures, and most importantly, and ultimately in their lives. If you appreciate what we're doing on the show, I would certainly be grateful if you subscribe to the show, if you give us a rating, a review. It means a lot to me. It means a lot to us and our team. Of course, our team is actually growing, believe it or not. We're bringing on some new individuals to help us with administrative stuff on the podcast, some of the marketing stuff. And so, if you're enjoying the show, it is, of course, 100% free. We just ask that you give us a rating, a review, subscribe to the show, and share it with someone else, because, that's one of the ways for us to grow our messages, for this to organically grow. And of course, if we're giving this to you for free, we ask that your fee that you pay is just to share this with someone else. If you find value with the show, we'd certainly be grateful. I've built businesses for, the realm of my professional life through referrals and through adding value and exceeding value. And so that's my goal here through Elevate. And that's our goal. That's our team's goal. So if you are finding value, if you are applying the principles that we've talked about on the show, and you're seeing some shifts in your business and in your life, give us a favor and give us a little bit of help and share this with someone else. So also, I will invite you to check out our new website, elevatepod.com. Of course, we've got a ton of resources, a ton of opportunities for you to apply, what we talk about on the show. Because we talk about show notes, it's all on elevatepod.com. You can take a look at every single episode we've had. We've got book recommendations. We've got, resources on the coaching side of things. You name it. I mean, we've got so much stuff there. Of course, check us out on all social media platforms, Instagram, Facebook, Twitter, you name it. Of course, our Facebook community page as well. You can go deeper, build a relationship with the tribe, and expand the conversation beyond Elevate. And go check us out there, Elevate Podcast Community on Facebook. And with all that said, I want to introduce you now to David Stein, who is the founder of the Money for the Rest of Us podcast. And Money for the Rest of Us in general. Since 2014, he has produced and hosted the Money for the Rest of Us Investing podcast. The podcast reaches tens of thousands of listeners per episode and has been nominated for 6 Plutus Awards. David also oversees Money for the Rest of Us Plus, the premier investment education platform that provides professional grade portfolio tools and training to help individual investors manage their own investment portfolios. He is the author of Money for the Rest of Us, 10 Questions to Master Successful Investing, which was published by McGraw-Hill. By the way, I remember McGraw-Hill back in the day, textbooks for college and high school and all those things. So Obviously, David has got a lot of credibility with the McGraw-Hill publishing of his book. Previously, David was an institutional investment advisor and asset manager. He was a managing partner at FEG Investment Advisors, a $15 billion investment advisory firm. At FEG, David served as the chief investment strategist and chief portfolio strategist. So I want to introduce you to David, and I hope that you enjoy this wide ranging and very insightful discussion with this expert in David Stein. David, welcome to the show, sir. How are you?
Hey, it's good to be here. Thanks for having me.
My pleasure. No, it's actually really a pleasure to have you. And tell us a little bit more about yourself behind the bio. Obviously, you've got a great public presence, and many people know you from that perspective. But what are some things that people don't know about you?
Well, I quit my job at 46, called myself retired, and realized that when you use a word like retired, people end up having projects for you to do. And so I stopped I don't use the word retire anymore. I'm a big hiker. We like to travel. I'm a biker. We spend half the year in Teton Valley, Idaho, up in the mountains, and then the other half of the year in Tucson, Arizona, when we're not traveling around.
That's awesome. It's almost like you're the guy, or you were the guy who had the truck, right? Anytime you know anybody who has a truck, it's like, all right, I need you to move this over here, and I need you to help me move, and I need you to pick something up. Now you're retired. It's like, all right, wait a minute, I could put you to work. You got some skills here.
Exactly.
That's awesome.
But I work about 30 hours a week still, though. So it's retired. I'll keep doing what I'm doing for many, many years because I enjoy it.
So what was it about retiring at first that kind of drew you in, and then was it just because you felt like you got trapped into doing stuff for other people that you weren't expecting, that then said, hey, maybe I'll find a better way of spending my time? Or what was the shift there that happened?
Well, I mean, the original shift. So I was with my partners in institutional advisory firm for 16 years, and had ultimate freedom. I mean, I lived in Idaho. I didn't have a boss. I was making great money, but there just seemed like there could be more freedom to be had. So what would it be like to not have clients calling you up, or not have to go to give a speech somewhere? What would that be like? And ultimately, I quit to just kind of see what it would be like to go out on my own. Because for many years, as an advisory team, we always said, we think this, we think that. I wanted to see what it would be like to just say me, here's what I think about the investment markets right now, or some other topic. And so I did that. It took me, several years to kind of figure out my path, part of it, which was saying I was retired and realizing, no, I guess I'm really not retired, even though I'm not working. And so and I tell people all this all the time when they quit their job, particularly if they've been at a particular organization for a decade or more. In some ways, it's like, it is a very emotional transition, and there's a stress there that you don't even recognize. It's a lot like a breakup of a marriage or something like that, although this is generally happier because you're leaving a work situation, but hopefully it's happier. But it takes time to adjust and to realize, all right, here's what I liked about that former situation. Here's what I miss about it. How can I create something that has the elements I still like, while not including those that I didn't like as much?
Well, what was the most useful mindset shift that you experienced through that process? Obviously, you had to shed some former sort of constructions of yourself to become this new version of yourself, but what else did you have to shift as far as your mindset?
Just to be patient and realize it's going to take time. That with anything, I mean, you can't build a presence. I mean, I had no presence outside of the institutional investment world when I quit. And it takes time. I probably started and shut down 4 or 5 different websites, different businesses, and realize, and I'd launch something. I'd be all excited about making it, launching it, and then I'd launch it, and it's like, oh shoot, I hope nobody wants to actually hire me because I really don't want to do this. I mean, I like building, and so it's just taking months and a couple of years to figure out, all right, this is me outside of my former corporate role. And here's what that me wants to do. now that I have all this freedom, and how do I balance how much I want to work versus leisure, and how much travel versus staying home. And it takes experimenting, and it takes time.
This episode of Elevate is brought to you by CF Capital, a real estate investment firm that focuses on acquiring and operating multifamily assets that provide stable cash flow, capital appreciation, and a margin of safety. Our team, including yours truly, leverages its expertise in acquisitions and management to provide investors with superior risk-adjusted returns while placing a premium on preserving capital. Our mission is to provide property investment and asset management solutions to help investors maximize their returns by investing in high-value multifamily communities. To learn more about future opportunities, visit cfcapllc.com. Again, that's cfcapllc.com. So you almost went from, having sort of a deep foundation within the firm that you were working, then to shifting towards what's going to serve me, right? What's going to serve my own outcomes, and what's the lifestyle that I'm going to design, which is, we're really about that on this show. It's about lifestyle design through creating vehicles that serve you, right? Whether it's real estate, whether it's other investment vehicles, as well as investing in your own personal growth, understanding and optimizing and maximizing your own mindset and your own sort of the way that you show up as a leader of yourself and of other people. But talk to me about that whole shift for you. What were some painful things and some things that you learned that you didn't expect to learn through that process?
That's a good question. As I think back, I go back to it. It just takes time. So, I learned that, for example, I don't like to manage money. Like, I don't like the stress of actually pulling the trigger on other people's investments. And so when I launched a membership site, it was all education. And then eventually members were like, well, I want a model portfolio. Give me some portfolio examples. And you realize, okay, that's not quite like money management, but it's still, you're providing some recommendations in the form of general education. And so part of it is you'll get feedback from clients or people that you interact with that says, you should do this, and then you have to decide, well, maybe I can do this, or maybe I'm willing to do this. And so over time, what I've been willing to provide in the investment space is more than what, I was originally willing to do, 6-7 years ago when I launched my site. And so it's an iterative process, and you realize that it just takes time, and it's that interaction with the marketplace, with what you build, and getting that feedback. And then, just because you get feedback doesn't mean you have to do it. And then you can decide, okay, I actually want to do this. I'm willing to do this and to be of service to my community.
Yeah, absolutely. I think that's really an important distinction. As an entrepreneur myself, and I know many people listening, they've experienced those failures or perhaps market feedbacks that have allowed them to pivot. Perhaps there's a silver lining in these failures, which gives you an opportunity to do something perhaps that's more in alignment, not only with your future, but also what the market wants. And, I think it's important to take that feedback and apply that to your business, or maybe take a different direction, right? If you have a failure, it's not the end. It's just about how do you react. So tell me, from an investment philosophy standpoint, if you were to talk to your younger self today, looking back, what would you tell yourself about developing an investment philosophy? Obviously you've seen different cycles throughout the years, and what's the best approach, to really start towards building an effective long-term investment philosophy?
Well, I would tell myself to focus on asset classes. So an asset class it's a basket of securities with similar characteristics. So an asset class would be U.S. large company stocks, or non-U.S. stocks, or real estate investment trust. So often, and I was the same way. I studied finance in school. And well, if I'm gonna do investing, I want to start researching options, like stock options or individual stocks. So I started researching all these companies, and I spent well over a decade conducting due diligence on some of the top hedge fund managers in the world, and equity managers. And you realize that, one, it's extremely competitive. And as an individual investor, I'm not going to get some type of informational edge to identify that a stock is mispriced, because that's what you do. When you're buying a stock, somebody sold it to you, And that stock reflects the consensus expectations of the market, how fast that company will grow. Tesla, for example. A lot of people want to buy Tesla. Well, great, buy Tesla. But if you buy Tesla, the only way Tesla is going to do well is if it does better than what everybody already expects it to do. And I spent a lot of time doing that, trying to find individual stocks. And you realize, no, it's way more interesting just to buy baskets of asset classes and enter them when they're attractive, when everybody's fearful and panicking. And that's how I started investing institutionally. It's how I managed assets. But I would have saved, some time if I just focused on that in the beginning, as opposed to diving down and trying to trade options or trying to pick individual stocks and outperform that way.
Yeah, I think that's important. And, as a real estate guy, I look at the stock market sometimes and I say, how do people make sense of this? It seems so speculative. And of course, as you mentioned, there's many, highly professional individuals operating in that space that have so much more of an information advantage than you do. So I think that's really helpful to start from that position of, all right, let's identify the asset, classes and look at the buckets and identify where are we in the, macro or micro market cycle and make decisions based on that. But it still seems perhaps, and maybe this is some ignorance from my side of things, is that there's still quite a bit of speculation going on there. But could you talk to me about a little bit of perhaps maybe what the strategy is behind, you talked about the philosophy of identifying the baskets and the asset classes. Now, what does your strategy look like from there? And what do you recommend to your clients?
Well, what I focus on is what I call return drivers. So, over long periods, what is it that drives a particular asset type? Let's say real estate. It's driven by cash flow. What's the dividend? What's the rent? What's the income? It's driven by how that cash flow is growing over time, so the growth rate, and it's driven by the price that investors are paying for that cash flow, be it a price to earnings ratio for stocks, be it a cap rate for a private real estate opportunity. And those three things work together. So when I'm trying to identify an asset class, I'm very cognizant of, well, what is its income? What's its cash flow? What's its yield? And to what extent is that cash flow growing? And what are investors paying for that? Are they overly optimistic? Private real estate right now, and it's been this way for a number of years, the cap rates are extremely low. And so low that, it's not an asset class that I'm necessarily comfortable investing in, because I remember when you could pick up properties, where the cap rate was double digits before leverage. And now, they're selling for 4 to 5% type cap rate. And now obviously there's some opportunities out there, but you have to search far and wide for them. And I tend to be a lazy investor. So I'd rather focus on things that I don't have to do too much due diligence on, focus on asset classes, focus on looking at where people are panicking and take advantage of that. And that's how I invest.
Are you seeing a disconnect in cap rates in the private real estate market versus real estate investment trust market?
You have. The public REIT market has sold off way more than private real estate. And, it remains to be seen based on how COVID plays out, whether you'll see private real estate valuations drop. What's supporting it is very, very low interest rates. And so, there's a case to be made when you look at the cap rates on private real estate versus bond yields. But at this point, there is a disconnect. So public REITs are more attractively priced than private real estate opportunities right now.
Yeah, and we're absolutely seeing, highly compressed cap rates in the private real estate market from our vantage point. And I know many of our listeners and partners are as well. So it is obviously extremely challenging to locate opportunities that make sense. And obviously with a rapidly changing environment, in addition to a higher sort of level of distress in the marketplace, it's really interesting with all of those components sort of merging together. Making sense of the marketplace can be challenging, but talk to me about that in terms of your vantage point. Obviously you deal with many different asset classes, but from a high level, how are you making sense of the current market, and what sort of steps are you taking, from a capital, preservation as well as a growth perspective?
Well, the way that I invest is very much focused on capital preservation. So my overall stock exposure, like common stocks, is less than 10%. but I use what's called an asset garden approach. So I just want a variety of asset types, just like you have a flower garden, you have a variety of flowers, different types, different roles. And so I have well over a dozen asset classes, from preferred stock to private capital, where I'm in venture capital, leveraged buyouts, I'm in real estate investment partnerships. I don't own any direct private real estate right now, but because I have found doing direct lending way more profitable. So I have lent and hold the mortgage on a 12-plex apartment building where the interest rate's at 6.5%, because what you're seeing, and I don't know if you're seeing this or not, but a lot of people want to buy real estate through their IRA. And banks, there are very few banks that are willing to lend to an IRA because they can't get a personal guarantee. And so the interest rates are very elevated. And so I'm willing to lend on that because if they put 50% down, it's a very, very attractive yield. I mean, higher than the cap rate on the building. You can get more on lending to it. And so the reality is you can't get the timing perfect. I go back to, when I look at a given asset class, what's its cash flow or income stream? How is it growing? And what's the valuation placed on those cash flows? And then just have a lot of diversification. From a macro standpoint, I'm finally on our site, we went back to neutral after being, really bearish for the past couple of years, because you're finally seeing corporate profits turn around. You're with the potential for the vaccine. I mean, you have more of a tailwind now than we've had in some time, and so that makes me more positive.
So when I think about just some of the comments that you made regarding private real estate, and I know that we're talking about the garden, right, in general, and we've got many different sort of approaches to the portfolio. But when you think of, you mentioned you found direct lending to private real estate to be more profitable. I'm assuming you're talking about with sort of in conjunction with the level of risk that you're taking, because wouldn't you agree that a leveraged acquisition of a real estate, asset would be more profitable than a 6.5% sort of, return on a debt?
Well, yeah, but I don't have any debt. So yeah, if you leverage, we talk about return drivers. Leverage is one return driver, and individuals sometimes confuse, and I'm sure your audience doesn't, but they confuse, what's the return before leverage? And then look at, and what's the margin of safety before that. But no, I mean, in this environment, no, I'm not comfortable leveraging up a 4% cap rate building, because real estate takes work. And, you can get the management team to help, but I'd rather take unlevered at 6.5%, or I have a 50% equity position and I don't have to do anything except cash the check, and then go find other asset classes that are more attractive on an unlevered basis and go from there. But again, it depends on your perspective. I tend to like paper assets where I don't have to do a lot of work. I own unlevered land. So we do own that, and gold, cryptocurrencies, but it's a variety. But, private real estate, while I've done it, we converted we did a lot of borrowing or real estate in a college town. We bought private homes. We've converted them to triplexes. I thought about holding them, and it's like, well, geez, the valuations are so high. I'll just sell the thing and not worry about trying to rent it out.
I love it. All right. Well, I can't let you go without talking about cryptocurrencies and what you're seeing there, because I'm intrigued. I find, I never want to invest in something that I don't know much about, but obviously there's a lot of talk about cryptocurrency. So what's your perspective to that asset class?
Well, first off, it's pure speculation. It's a form of digital gold. So Bitcoin has some definite advantages over gold in that it's way more portable. Its market cap is much less, but it also has a much younger history. So if people continue to hold Bitcoin because they trust it and they want something of value where there's a limited supply, because there is a limited supply of Bitcoin, then it'll do well. So, I have about 3% of my portfolio in cryptocurrencies, as a pure speculation. And I've had them for well over 5 years. And, occasionally if it sells off, I'll add. But it shouldn't be a big portion of someone's portfolio because we have no idea. If people lose trust in Bitcoin, then it's worthless. But then again, other fiat currencies are worthless too. I mean, they're all currency is based on trust and trust in the system. And cryptocurrency and gold, those are monetary assets that don't have the same institutional trust baggage that the dollar does or the euro. And so that's why there's some advantages to them. Gold, it's been around for millennia, and people have believed it has value, but it in and of itself, it's worthless. There's no institutional commercial use for gold. It just sits there, but people have valued it for years. And so having, diversifying your source of monetary assets to where it's not just dollar-based assets, but other currencies make sense to me.
And I would imagine that you've got some thought, to what's going on in terms of, money injection or dollar injection. I mean, what's your crystal ball telling you over the next few years? I mean, is the dollar going to become irrelevant at some point? Are they going to print themselves into oblivion, or what's your take on that?
No, it'll be decades, because the dollar remains the reserve currency. The vast majority of international transactions in the dollar, international tradings in the dollar. The U.S. has the biggest and deepest capital markets, and people, there's a huge amount of dollar borrowing outside of the U.S. And so unless that changes, there isn't any viable replacement for the role the dollar serves. And, the dollar has always grown, the money supply. It isn't government spending money. The primary driver of growth in the dollar is bank lending. When banks make loans, that creates new dollars. And 90% of the money supply is from banks lending dollars. And through that process, the accounting of making a loan creates new dollars and new purchasing power. And that's been going on for decades, and it'll continue to go, which means we'll continue to have inflation, but we're not in a situation where inflation is out of control unless there's so much dollars created that we get a capacity constraint. And that's what pushes up prices. Or people start to fear inflation and they change their behavior and they start hoarding. That can push up prices, but I don't see anything on the horizon that suggests that's imminent.
So you don't think that in the near future that the dollar will be replaced by another currency as the reserve currency of the world?
No, because it's not like people make that choice based on the individual decision. I mean, there is no body that nominates a currency the reserve currency. It's based on the actions people take, that they want to own dollars, that central banks want to hold dollars, and they like the ability to borrow from the Federal Reserve when there's a financial crisis, like they did this year through swap agreements. Or you might see less in the dollar, but you're not going to see suddenly the euro take over, because that's not the way people are behaving. Businesses, they continue to want to transact in the dollar, because once you have it, there's somewhere you can invest it very easily. It's a very, very deep market. And there's nothing even close to replacing it at this point.
So let's talk a little bit more about REITs, because most of our listeners are real estate entrepreneurs and obviously highly invested in active real estate or syndications or funds. So talk to me a little bit more about REITs. What are you seeing as some of the best opportunities in the real estate investment trust landscape?
Well, first off, you have to recognize there's two types of REITs. So there's equity REITs, which own rent-producing commercial properties, and there's mortgage REITs, which are a completely different animal. It's basically a highly leveraged investment in mortgage-backed securities or bonds backed by residential home mortgages. So on the residential or on the equity REIT side, one of the things people don't realize is that an advantage of REITs is their flexibility. So people think, oh man, REITs got killed in the sell-off and nobody's going to go back to the office again, and that's going to kill the asset class. Well, REITs don't have static portfolios. They can adjust their portfolio. They can reposition their portfolio. They can buy different opportunities. They can sell underperforming assets. They can buy better assets. Only about 25% of the REIT market are cyclical. So shopping centers and offices. The majority of it, 40% or so, are more stable. It's healthcare, it's cell towers, it's self-storage, it's industrial buildings. So it's a huge array of property types, many of which as individuals, we don't ever get exposure to. We don't have the opportunity to invest. And so it's a very, very diversified play. It tends to underperform private real estate simply because it's less levered. The average REIT's about 30% leverage compared to, many real estate deals are 70%. So if you're just comparing the raw returns, REITs, don't look as competitive. But as a passive way to hold a diversified portfolio of properties, and that passive in terms of, let's say, an ETF, but recognizing there's REITs under there that are actively managing their property pool, seeking to upgrade it, looking for opportunities, and they're just as competitive and knowledgeable as institutional private real estate firms. The only difference is they tend to use less leverage, and the majority of their cash flow gets paid out to shareholders in dividends, and they're much more liquid than private real estate opportunities.
Yeah, and obviously most of the REITs are some of the most well-located assets in the world, and some of the highest quality assets. And for the most part, you're looking at Class A, best of the best, towers and multifamily properties and office properties, industrial properties, so on and so forth, from every different asset class to commercial real estate, in addition to residential. And you talked about even some of the debt sort of options as well. So I think there's a lot there. But is there anything else that you'd point to for folks who are looking to further diversify their real estate holdings into perhaps REITs? Is there anything else that you'd suggest to them as they're becoming more and more educated?
Well, I on my website, moneyfortherestofus.com, I have two comprehensive guides, one on equity REIT investing, the other on mortgage REIT investing, and it includes what to look for valuations and how to go about that. So that would be one resource. REIT.com is another resource. They have all kinds of data on investing in REITs, and so those are two sources to get up to speed on the asset class.
Well, we're excited because soon we're in the works of getting the man, the myth, the legend, Sam Zell on the show to talk more about REITs, because he's one of the godfathers of the industry. So looking forward to that. But thank you for that information. I think it's super important for folks to get educated and see the options there, right? And locate, what works for you, right? Because everybody's different. Everybody's investment portfolio is different. And so one thing I'd love to know from you, David, is something that obviously with you having such an influence on so many different investors, is there something that you would point to maybe from a high level that you would say is sort of the mindset of the most effective investors over a long period of time? I mean, obviously you've got to manage your emotions. You can't just zoom in and say, well, this month or this quarter has been awful or it's been great. I mean, what else would you point to in terms of the mindset of the most effective investors that you know?
Well, they have a discipline. So they have a specific investment process that they go through, and some type of framework that helps them make their decisions. So it allows them to control their emotion. And if you look, investors such as Howard Marks, I mean, he's done multiple memos on his particular framework, or other investors have specific ways to do that. And I think that's the key. I mean, I last year I wrote a book really addressing this, the 10 questions that investors should ask before they invest in any asset class. And I wrote that because what you often find is individual investors, they chase the next shiny thing, be it cryptocurrency or gold or real estate. And they don't really have a framework for deciding, okay, this is actually the asset class that I should invest in. And you mentioned with cryptocurrencies, you mentioned one of the questions. What is it? To be able to explain what the investment is, to understand it. You'd be surprised how many people invest and they don't really understand how cryptocurrencies work or what a blockchain is. If we can't explain an investment to somebody else, a friend or family member, in a way that they can understand it, then we shouldn't invest, because that process of doing that, it humbles us. And so the best investors I know, they're not great investors because they can accurately predict the future, because most cannot. The best are, they're asset class focused, and they have a framework and discipline that they go through before they make an investment.
All right. So you got the 10 questions. We know one of them. So walk us through the other 9, or maybe are you giving us a cliffhanger here to go look at the book, or what's
Oh, no. I mean, I'll talk about, some other examples, the questions. Question 2, is it investing, speculating, or gambling? Investment is something that has a positive expected return. So it has the cash flow. It has the cash flow growth. The speculation is something like gold or cryptocurrency, where there's some disagreement on what the return will be. And a gamble is something with a negative expected return and should be done for entertainment. Some of the other questions are, what's the upside? So understand the return drivers and what has to happen for that particular investment to generate a positive return. The risk, the downside is another thing to be able to answer. Who's on the other side of the trade is a very important question. Understanding who you're trading with. A stock market, as I mentioned, is an auction market. What does that seller know that you don't? We do the same thing with real estate. What does the seller know that you don't? Understand what their motivation is. So we need to be able to answer who's on the other side of this trade, and what does it take to be successful. Is this portfolio, is this investment dependent on accurately predicting the future or outsmarting the market? Now, those type of investments I tend to stay clear of. I want investments that have a return driver that can be dependable, be it that cash flow, and there's something underlying, there's a tailwind to generate that cash flow. And some of the other ones are on the fees, expenses, and how does it impact your portfolio. And so those are the 10, and the books that is called Money for the Rest of Us, 10 Questions to Master Successful Investing. But the idea is to have a framework and a discipline, be it these questions or others, that you go through in order to make successful investments.
No, that's great. And we'll put a link in the show notes to the book so folks can check that out and dive deeper into these 10 questions. But thank you for illustrating that, because I think they're all extremely important and extremely poignant. I've got one thought, an investor that I really admire, of course, many would as well, is Charlie Munger. I read his book, Poor Charlie's Almanac, a few years ago, and I found it to be highly illuminating. One thing that he mentioned in the book, and really is kind of the theme of it, is being multidisciplinary and being a deep learner. One thing that I love about you, and something that you put on your website, is your list of books that you've read over the past few years. And, it just shows how you're such a learner. You're committed to continuing to grow your knowledge, your wisdom, and challenge your own beliefs. So talk to me about your multidisciplinary learning approach and sort of what role that plays for you.
Well, it's something that I've always done. As a professional investor, I spent a lot of time on planes. So, I read a lot. Anything, I read investment finance books, but tend to prefer, I'll read novels, I'll read other nonfiction, whatever, sparks my interest. And I continue to do that because I have to produce a podcast every week. And I don't do interviews, so it's a solo show. So I need to come up with 20, 25 minutes of materials. So that propels me to, want to read. But whatever happens, it has to be something that I'm interested in. Because the last, and I learned this about publishing a book, is, people, they don't want a book. They don't want to be recommended a book, and they don't really want to be given a book, because then it's just this weight that they have, like, oh shoot, I have to read another book or add it to my list. And so, when I, for that reason, I don't necessarily, I'm not giving away books to people, because I don't want to put this albatross on their back that they feel like they now have to read this book. And I'm the same way. So I start a lot of books. I don't finish. There's a lot that I don't finish. It has to earn the right to continue to be read. It's got to be good enough. And, so, I'll finish probably 20 books a year, and I'll probably start, twice that many, 40, 50 books a year. And if I lose interest.
Is there anything that you'd point to that earns the right for you to finish, or is it obviously it's a case by case basis, or is
It's
there
a case by
anything?
case. I mean, it's
Yeah.
just gotta, I can't get bored. I get bored really easily. So if it, you know, it, if they're telling the same stories or that, you know, you've heard before, you know, they tell about Starbucks or, you know, just all, you know, the hero's journey. Like it's almost like people write a book and they discover that, oh, I've heard of their hero's journey. Like this is new. It's like, no, it's been like it's been a lot of books. So if it's got to be something unique or unique perspective or well crafted, and a lot of books get rushed out. You know, there's a reason the best books out there, you know, novelists, they only come out with a book every 5 years because it takes a long time to write a really, really good book.
For sure.
You can write a book in a month, but that's not, doesn't mean you could call it a book, but that doesn't mean it's very good. So it's got to be, it's got to capture my interest. It has to be well written. And, you know, sometimes I just get bored. It isn't the author's fault. It's just, you know, I wasn't ready for the book.
Hey guys, I just wanted to take a brief time out from this show, this incredibly mind expanding discussion, to speak to the high achievers, the high performers. I wanted to speak to those who have a burning desire to go to the next level and beyond. First of all, I hear you and I see you. When I got started as a real estate entrepreneur fresh out of my W-2 corporate job, I was excited and jubilant to create and design my future. At the same time, my business and life was filled with confusion, filled with fear, doubt, uncertainty, and to be honest with you, sometimes even sleepless nights and hopelessness, even while experiencing what many would have considered substantial success. Ultimately, I mustered up the courage to hire one of the world's top high performance business coaches to work directly with me on creating strategies, systems, and profound shifts towards accelerating my multifaceted performance and to become an industry leader. After years of investing significant resources into myself and in my business through this process, I'm now paying it forward as a high performance coach to those who feel called to elevate to the extraordinary. Wherever you are right now, you know deep down that you have it within you to be great. If you're someone who's seriously looking to elevate your business, your real estate portfolio, your cash flow, your deal flow, your network, your net worth, your lifestyle, and ultimately your life right now and ongoing for the rest of your life, I have a message for you. Because if that's you, then I invite you to visit coachwithtyler.com. I have limited coaching spots available to guide people like you who want to substantially close the gap from where you are to where you want to be. These are first come, first serve, and demand high touch, one-to-one focus from me directly to you. And this is not for everyone. This is only for those who are decisive, committed, and willing to do whatever it takes. It's only for those willing to play full out and invest time, energy, and resources into themselves to achieve greatness in real estate investing and beyond, which is what we're all about on this podcast. This is for those defiantly inspired for transforming as an empowered, limitless, and unstoppable human being in full control of their and their business's future. If that is you, I invite you to visit coachwithtyler.com. Again, that's coachwithtyler.com, where you can apply for this life-changing opportunity. We will then schedule a discovery session where we will directly discuss what's working, not working, and how we can work together to accelerate your future. With that said, enjoy the rest of the show.
Yeah, maybe it's just not capturing you at the right time. But
Right.
one thing that I really enjoy about people like yourself who are constant learners and curious is that they're humble. They show up with a level of humility that says, hey, I don't know everything. I'm willing to learn something new. But is there anything that you would point to that you have changed your mind about recently just through your learning?
Oh, I change my mind all the time, so much so I probably don't.
That's
I
great,
don't
by the way.
remember a specific instance just because you don't know. And great investors, they realize they don't know. I mean, we know most of what we don't know. And that's why, I like rules of thumbs. I like principles to follow. And, one of the reasons I'm much happier, not being a professional money manager is there's this aura around money managers that they can predict the future. And I don't, like, I can't. So I don't want to, I don't want to be paid for doing so. And when I left, I spend way more time focusing on, okay, how do we manage investments knowing we can't predict the future, but many people actually think they do and they act on that. And that's a really, and I call it at the time when I was writing about this about 10 years ago, I call it a terrifying question. Like what what if we invest in the world? Everybody thinks they know what's going to happen, but really nobody does. And that's a different perspective in terms of how to invest. And that's what led me back to asset classes, cash flow growth, dependable return drivers, understanding what it will take to be successful. And it's one reason I don't like a lot of leverage. In fact, we buy and sell a lot of houses as we do some remodeling. Now I'm applying for a mortgage for the first time in probably 12 years because one, I want to see if I can get a mortgage, which turns out to be incredibly difficult if you're self-employed. and two, but I don't like a lot of leverage. But, with rates this low, it's like, well, let me try again and see, maybe I'll figure out a way that can I earn more than, whatever the mortgage rate is after tax in investing.
No, that's great. And I just wanted to highlight, I love the fact that you're like, man, I changed my mind all the time. Because you know what, there's a lot of people who say, well, no, I haven't changed my mind on anything recently. And I find myself to just change my mind constantly. And perhaps, the new level of information or changing conditions and whatever it may be, whether it's, the mood of the public, you were talking about, I know the way that other people will behave if I study it, and I can bet on that to a certain degree. I can't predict the future, but it's interesting to look at psychology and understand sort of human behavior, and also looking at the controllables of the assets that you're investing in. I find that to be just a fascinating concept, sort of all married together. So I just appreciate that. But is there anything else that you'd point out on that?
No, but I approach the politics the same way. So, on my podcast, it's not, we'll discuss economic policies. We'll look at, what Trump is doing or what a Biden administration might do, but it's not done from a political perspective. Because if you spend enough time with people that believe one way or the other, you realize that those are deeply held feelings. And, and whatever logic they came up with, like, I'm not going to convince them otherwise. And so I'd rather focus on, well, here's the potential economic consequences of this policy or of people behaving this way, but not, never approach it from, I'm going to learn so I can convince somebody different. I'd rather just, here's my thought for the moment. Here's how I see what's going on. Just stay humble, as you mentioned, and we'll see how things evolve, because invariably we're going to be surprised. And that's a constant with investing. It's the endless stream of surprises that we just didn't think about. I mean, even 2020, like, who would have thought that, here it is November, and, I haven't sat inside a restaurant, I've been on a plane since March. I mean, and it's a very different world than it was a year ago. Yet it's been a great year, from a personal standpoint. I mean, obviously many people are struggling, but, it's tests like this that you really see people become creative and figure things out and get by. I was the other day, I've noticed, we've just been back in Arizona, and I've noticed all these trucks, packed with bicycles. And I said, well, where are all these bikes coming from? And you realize that, well, they're taking them to LA or cities where there's a bike shortage. They're redoing them. And so they've taken advantage of, because the jump in used bicycle prices, because there's an 80% year over year increase in new bicycle sales, and there's a shortage. People adapt. And that's what's so fascinating about the economy and real estate. I mean, real estate is going to adapt. REITs will adapt. Private real estate investors will adapt, and we'll see how it plays out.
Yeah, change is the only constant. And when we see change, it's about how do we react, right? It's not always, a negative, but there's always a positive hidden there if you look for it. So no, there's a lot of value in that. And I want to transition into our rapid fire section. We call it the Rare Air Questionnaire. It's about being uncommon. It's about pushing the limits. It's about updating your knowledge. And it's about being ready to adapt, exactly what we've been talking about thus far. So obviously, as being so well read and obviously an author yourself, I'd be remiss to ask you, if I didn't ask you, the top 2 or 3 most impactful books that you've read over the past few years. If you had to point to those, what would those be?
I'll start with a book back. It's been more. It's probably 2000. It came out. It's called Soloing by Harriet Rubin. And, I was working, with my investment advisory firm. I'd only been there probably 6 years. And I remember taking it on a plane to Mexico with my son. and reading it for a week or so. And it really opened my eyes to, hey, I could actually do what I do on my own and not have to be part of a team. And the idea of doing projects for people. And, that was very enlightening. A book I really enjoy also is called The Unknown Craftsman. It's by Suetsu Yanagi. He writes, it's about a book about pottery, and I don't do pottery, but really it's about aesthetic, beauty, what makes something beautiful. And it's, I like the book because it's completely different. And, he's Japanese, and I've been to Japan 3 or 4 times. It's an area that I love going. So I like that. And then, I read scripture daily as part of my meditation, the Bible, the Book of Mormon, and other, scriptures. So those are also very influential in what I do.
Aside from our discussion today, what's the biggest way that you elevate your life on a daily basis?
Probably, I meditate daily. I take, a morning walk daily. I pray, I study scripture and just, start the day right. I mean, back when I was in high school, I was following Stephen Covey, and he talked about sharpening the saw, and now it seems like a cliche because he's so dang popular, even though he's passed on. But at the time, that was eye-opening. Like, sharpen your saw, make sure your blades are sharp. Spend some time each morning, what he calls a private victory, where, you set your day right, and then you can go out and have public victories in the arena, be it business, education, or whatever your public sphere is.
I love that. What's the biggest way that you elevate others around you?
Serve them. So, in business is service, living is service. I often think, what we do for our job, it's like having a role in a play. This is my role, in my life. And the reason I have this role is because I get to interact with others, like on an individual basis. And it's way more fun to help somebody individually than to write a check to a charity, because you can see it in their eyes. And so we're always looking for ways, like, who can we help today? And even if it's, smiling at them, or, giving a bigger tip at a restaurant or something like that, anything we can do just to help people out.
Well, you've been a great service to us today, and I really appreciate you sharing so much wisdom with Elevate Nation today. It's an absolute pleasure to have you here, as I mentioned early in the show, but tell the listeners how they can learn more about what you do.
Sure. So my website's moneyfortherestofus.com. So that's where you'll find the podcast, the membership community, the book, and anything else I happen to be doing.
Yeah, we'll put a link in the show notes there to the website, to the podcast, and everything that David's all about. So rest assured that will be there. Check out elevatepod.com for all of that. And I want to encourage you to share this with someone else. Who else do you know that could really benefit from listening to this conversation, taking action on this conversation? Because there's so much wisdom here. There's so much to apply. And what were your top 3 key distinctions? I always ask this question for a reason, because you have to distill back and say, hey, if I'm learning and listening, what am I taking action on? And so distill this down to what are your top 3 key distinctions. So I would encourage you to do that, share this with someone else, and actually become the teacher, because we all know that the teacher really in many ways learns the most. So share this with someone else, and also take action, because this is the most important part. If you don't take action on what you learn, there is no power in just knowledge. Knowledge is not power. The real power is in taking action, applying, and being willing to be adaptable, because look, things are going to continue to change, but those who are adaptable are those who rise to the occasion. So with all that said, David, I just want to thank you again for being on the show.
Great. Thanks for having me.
Elevate Nation, thanks for tuning in. We'll see you next time.
Thank you for listening to Elevate. If you enjoyed this episode, be sure to rate, review, subscribe, and pay it forward by sharing with a friend. Most importantly, take this opportunity to elevate your results by taking immediate action on what you learned. For more, visit elevatepod.com.